Hello, everyone. Thank you for joining us today. We're going to get started here in a couple minutes, and might give just an extra minute or so for people to hop on and join the broadcast. Thank you for joining us today. Talk to you in just a minute. All right. Well, it's 12 o'clock, and I think we've got a lot of people on the line here with us. And so I think it's good a time as any to kind of get started here. Hopefully everyone else will join on if we have a couple stragglers here, but just in respect of time and respect to the people that got on here, we want to get started. And we really appreciate you getting on, and I'm very excited to talk to you about the topic today, frontier technology and investing with LOUP Ventures. We got Doug and Jean with us here today, and we're going to talk about the cutting edge, the front edge, the leading edge of technology and why you need to be invested there. And we think that you're going to be enlightened by a lot of the things they have to say. In addition to that, before we get started, to kind of get everybody thinking in the right mode, I want to ask a quick poll question. I was wondering if we could advance the slides. Here we go. How will Fang stocks do over the next 3 years? So how do you think they will perform relative to the overall market in the next 3 years? Are they going to kind of outperform the broad market? So think of SPY. I mean, how will they do compared to that? Will they do about the same as the broad market? I guess you could think of the Qs too, either one, you know, however you think about it. And then will they underperform the broad market? So yes, SPY is probably more fitting for broad market. So how do you think they're going to do? Are they overvalued? They're going to let some gas out of the balloon here pretty soon, or are they going to keep charging ahead and over the hill? Or are these mega giant companies going to slack off a little bit? What we see are, and I think Gene's going to speak to this, an emergence of another group, another wave of companies that are going to paint the way for the future. And as everyone gets a chance to answer that, I think why don't we go ahead and move to the next slide and see how people are answering us here. I think we're going to get that up. There we go. Oh, wow, we got a whole mix going on here. We got 41% saying, okay, they're going to be net neutral to the market. And then we got 35 saying they're going to continue to do what they've been doing. And then we have a big group of people saying, no, they've kind of had their day in glory and they're going to struggle going forward. So we'll just have to see what really happens. But I think that's appreciate everyone taking the time to do that. And yeah, I don't know what I really think. It'll be interesting to see what Gene and Doug think about that. So just maybe going to the next slide, or the next slide in the deck to get our presentation started. I think everybody on here is familiar with Innovator. I just want to put a quick slide up here to give you a little background on us if you're not. We're at about actually more 4.6 billion today. Things have been growing well here at Innovator. We started back in 2018. A good bit of the team here came out of PowerShares when we started PowerShares back in 03. And we're continuing along this line of innovation within the ETF space, not only in the types of products we bring, but also in the themes that we look to introduce into the marketplace. And that's why we love being partnered with Gene and Doug and the team at LOUP. One thing I would mention to you too, that PowerShares, when at PowerShares, we were actually the very first ETF firm in the world to introduce a thematic ETF. Thematic investing is getting popular these days, but even back then, we were really big on themes because we believe themes or waves, investment waves, are really a great way to invest. And they also capture the imagination of what's happening at that time in the marketplace. In fact, that first one was clean energy, the Wilder Hill Clean Energy. If any of you own that, it kind of went flat for a number of years, but it's had tremendous performance here recently as a lot of the clean energy companies have done very well. So just moving along, to take a look quickly just at our product line here at Innovator. Most of you are familiar that we have the defined outcome ETFs. We're familiar with those. And then we really just have a very small group of conventional ETFs that we support. One is this preferred, and we have LOUP, what we're here to talk about today, and the 50. And the one thing important about that I would say is that we are really committed to these conventional ETFs that we have. We don't, you know, when we add these types of products to our lineup, we're sold out. And so that should tell you that I personally am an investor in LOUP, and I'm a huge investor in, you know, all of these products, but a big investor in LOUP, and I'm a big believer in investing in the cutting edge of technology. And that's why I'm excited about LOUP. And maybe give you a little background. You know, I think that LOUP is really one of the top tech research, independent research firms in the country. They're involved in not only just researching these companies, but they're also involved in private equity. They're actually investing in companies before they're public. So they're seeing all of these trends, which I think is a powerful thing to know, that these guys we have on the line for you today, that is what they do. That's where their knowledge base is. Not only are they some of the most respected financial analysts in existence that are independent out there, but they are actually investing in these companies, and they're able to identify the trends. I think one of the things I love about LOUP is this low overlap, and that they're smaller companies. You know, they're not just these mega companies. I mean, obviously they're equipped and very capable to talk about. I mean, you've heard these guys talk about Apple and Facebook and all the others, but they're identifying these companies you probably haven't even heard of that they believe can drive this wave going forward, and really identify the future of Fangs. And the other thing I love about LOUP, the ETF, is only 30 companies. We're not talking about hundreds of companies here that you need to be invested in. So with that, I'm going to turn it over to Gene, but we have one more question to ask, poll question, to see how you're thinking before we move forward. If you had the opportunity to get in an autonomous car today, would you do it? No, maybe, or yes? So, you know, you get on your Uber app and you order up a car, and a car shows up, nobody's in there, and you're like, whoa, you know, do you get in the car? Do you not get in the car? You're like, oh, that's, you know, kind of hot. I don't know. I would have to really be ready for that. For me, it would be pretty exciting. I just make sure I was buckled in pretty good. But tell me what you think. Would you do it? Would you not? Or do you not trust all that? And, you know, I think what I'd be concerned about is it's going to be way too slow. You know, I've heard those cars, you know, they're real careful, and be like, okay, seriously, let's get there. But, you know, everybody has their own opinion about this. So let's see how everybody answered. Whoa, no. Okay, yes, no, maybe. So yeah, we got the whole spectrum again. We got a real diverse group on here today. We got the real conservatives and we got the real aggressives. So Gene, what do you think of that? I'll let you take it over from there.
I appreciate that. I think it tells me, I just want to mention too, Bruce, what you talked about, these autonomous cars moving slowly, it creates some road rage from human drivers because they get frustrated with the very conservative driving nature. There's, I'm sure, an investment opportunity around that. We're making investments in some of the earliest stages of these.
Is that a road rage investment opportunity, or
there actually is. It comes in the form of the way that these autonomous vehicles can see other objects. I'm going to keep it pretty high level and leave it at that. We are right there with you. We want to make these cars as fast as possible. I can tell you this, that car shows up. I've been in an autonomous car once before, a Tesla Model 3 that was about a year ago. They tricked it out into autonomy mode, and it was, it just really felt like an out-of-body experience. I would jump in that car. I know Doug would be there too. And we've done this poll several times and have seen this kind of mixed reaction. And we really see that as encouraging, because where we want to invest in LOUP at our core asset, it really is research. It's identifying these transformative themes. And transformative themes really is ways that our lives are going to be profoundly changed, similar to what the internet did, the PC, mobile, what AI is doing now. Those are the curves that we are vectoring around. And typically when you enter into those curves, and that's why I love that question you asked, Bruce, typically when you enter into those curves, there is a healthy sense of skepticism. And that's what, we've given that poll before, and newsflash that this group is pretty representative to how people in the US think about autonomy, is that there's a pretty mixed group, but we see that as being an investment, an investable area opportunity, as eventually that those numbers will gravitate to, I won't even think about getting into a car with a human. And so we're excited to talk about LOUP, a little bit about who we are, about our ETFs, about some of the themes that we're investing in. Doug and I have worked together for a long time, 10 plus years, and honored to have him with me. I think you will find Doug one of the smartest people you've ever met. And think about these curves that we're going to talk about as undeniable truths. Welcome my son Otto to our presentation, if you can hear him. So I would just want to really anchor, LOUP is about research. It's about understanding these transformative themes. And as Bruce mentioned, as we are trafficking in both early stage, mid stage private companies and some of the biggest public companies, our track record has been a lot of that. A lot of people know us with the big public companies, Apple, Facebook, Amazon, Tesla, Google, but our work extends well beyond that, that many of you may not know. And again, just kind of bringing this all together as we really see this, this combination, this marriage between public and private, as something that's a competitive advantage that we have to really identify these themes. We talk to these big companies, we talk to the small companies, we develop a sense about where they're going. Mike, if we can go to the next slide. We're gonna maybe take a step forward and talk about some of the themes that we're investing in within the LOUP ETF, the Frontier ETF. And it starts with work. And work has had a profound change over the past year, but as we invest in the future of work, it's not just about work from anywhere, but I'm gonna just pause there for a minute and talk, kind of frame in what the work from anywhere, what the reality of that is that information workers account for, I think it's about 60 or 70 million people in the US fall in that category. And before the pandemic, it was just under 10% would work from home or part-time from home. And during the pandemic, and it's still close to 90% today, still are working remote. Eventually that is going to kind of revert back to the mean, and that mean is probably going to be somewhere between 10 and 20% of people are going to work from remote. But there's opportunities around tools around that. There's also opportunities around the experiences around, that our work experiences, our remote work experiences. Something that's suffered over the past year is culture, and there's opportunities that we can invest in that basically enable technology to create a real sense of presence. This could be through augmented reality, virtual reality, but there are opportunities that we can invest in to pursue that. The second area is around retail. And When we think about retail, we really think more about commerce that can be more complicated commerce. This is not your typical purchasing things from Amazon. We think about items that can be bulky, things that historically have been retail that's been done with a human involved. Think about what's happened in real estate, for example. Today, about 0.5% of all homes are bought and sold online. That number can increase over time, but there's a myriad of opportunities to invest around that, not just around Zillow and Open Door, but there are payment processors, there are mortgage companies, there are different ways to embrace that. Even walkthroughs, virtual walkthroughs, eventually when many homes will be purchased sight unseen, you'll just do a virtual walkthrough. We're seeing more of that. But that's an example of kind of how retail is evolving. And then transportation. And we started with the poll question around autonomy, but it's so much more than autonomy. I do want to point out that autonomy, passenger cars moving by themselves, is probably going to be one of the most profound changes that we're going to see over the next few years. And specifically, when you think about how tech has changed us, think a decade ago, 15 years ago, with our tech experience, it was typically a laptop and in the office, maybe a laptop on the road. And now we have a world where our heads are down when we're walking around, when we're at dinner, we're focused on our phones. That is a very measurable, profound change. And we think there's going to be a similar change around transportation, around electrification and the autonomy of that. But the reason why that opportunity is so much bigger, it impacts beyond people moving around, but logistics, it impacts public transportation, it impacts e-commerce. There are many layers to that. And so that's the transportation opportunity that we're pursuing.
I can talk to you about play and health. Play is, of course, the counterpart to work, and it encompasses everything from gaming to communication, social networking, all these services that we use in our leisure time. And we had kind of a big, I think, event in the play category yesterday that Gene and I have spent a lot of time on, which was the Roblox IPO. It's performed very well, especially for a direct listing, but Roblox is one of the most popular games right now for teens and preteens. And really what it is it's in some ways a marriage of work and play. It's sort of the future of communication in our minds. They talk a lot about being the metaverse, a very early metaverse, where people go and they can have these immersive experiences that are created by developers in Roblox. And there are 20 million different experiences people can engage in Roblox's universe right now. It's insane. You could spend your whole life and have different experiences in that universe every single day.
I just want Doug to repeat that number. How many million? 20 million
20
different
million,
experiences.
yeah, there's 8 million developers that create experiences on Roblox, and it's still growing. You know, it's still very early. And I think what's really exciting about Roblox as a platform is it's not just a game, it's not just a social network, it's sort of a marriage of gaming and social networking. And that's what we kind of see as the future of play in a digital world. And so Roblox, like I said, has performed really well so far in the public market. It's been one day, but it's a theme, that metaverse theme, I think, is something that we're paying a lot of attention to in terms of future opportunities for investments.
Let me and kind of emphasize the concept of metaverse and why it's relative to today's conversation is that a few years ago when we started doing more work on the metaverse, it was something that did not resonate with investors, with consumers, and we continue to pursue that because we do believe that, like it or not, these are the experiences that are going to make up the future. And so it's a good example of what it means to be on the frontier tech. We tend to be early. And it usually takes a little bit longer than we think, but ultimately the transformation ends up being much bigger than we could have ever imagined.
That's right, and the same thing applies for how we think about health. We try to be early there too. There's two segments within health that we think are still underappreciated by investors. One is the idea of performance health. So that is things like hormone optimization. It is real-time biofeedback through devices like glucose monitors. We've made investments in both of those areas in the private markets. And then the other side is the neurotechnology space. And that marries brain health with computer science. And neurotech, I think, is going to prove to be one of the biggest themes that is something that investors are not thinking about right now if we push out 5 years. And it's so profound that if I told you some of the companies that we invested in and what they're trying to do, you probably wouldn't believe me. But we have a company that is creating what's called a high bandwidth neural interface. And if they're successful in what they do, what they'll essentially achieve is combining a computer with a person's brain, and it can do everything from cure deafness to cure blindness to even cure paralysis. That's how profound some of this technology can be. And so that's another area where we see things involving artificial intelligence. We see these kind of computing paradigms shifting, this huge new wave of technology coming, and we're trying to position ourselves in the right way, both in the private markets and the public markets through our index products and ETF.
Jump in a little bit more on the health theme there too, is that it's not just about being healthy, it's about your optimal health. I take a lot of vitamins every day. I think I take too many vitamins, probably to my detriment. And there can be an opportunity for me actually to take the optimal amount, and some of these technologies that we're investing in can help get that optimal amount. And then on the brain tech piece, I just wanted to emphasize that when you think about Loop and our Frontier Tech Index, some of these themes that we're talking about are you've heard of them before potentially, but the neurotech piece, this is something that is unique. We are definitely there early, and we know a lot about it, and look for more of those types of companies to influence the index.
That's right. And so as we move forward here, thanks, Mike, for putting the slides next. The next two sections, I want to talk briefly about just some mental models that we sort of use and apply to the creation of our index, how we think about investing, and then we can talk about the index itself and the ETF that it's attached to through our partnership with Innovator. The core mental model that I think we always come back to as a firm at Loop is how we think about growth investing. To invest in technology, we always say, is to invest in growth. If some new technology is not growing, it's probably not a very good new technology because it's not solving any meaningful problems for customers today. And so we think about these growth curves that you kind of see on the screen here as a representation of that mental model. And where we want to be investing is in curves that are still early on, so kind of on the left-hand side as we look at these sort of loops here, where you're still getting innovators, early adopters, people who are just adopting technology for the first time. Gene talked about sort of how people were thinking about the metaverse 2-3 years ago. 2-3 years ago, the metaverse was all the way to the left of a curve that we see here on the screen. I think today, maybe it's 25% left to right now. So it's starting to become something that people are talking about, people are thinking about. It's still far from mainstream, and I think it's still a great investment opportunity. The three curves that we have here are kind of how we break down our mental models, and we think about it in this way. The first curve that we have on top, we call it a current curve, and that is something that a new company typically is building into. So it's the first business that a startup might build. Roblox is an example. They have been building into this metaverse curve that we think is bigger than people realize for almost 15 years now, just going public yesterday. The second type of curve that we look for is what we call a new curve. And this is when an old company finds a new market or a new use for their products or technology. And the example that we always go back to that's been very successful is Nvidia. So Nvidia was sort of this old sort of legacy GPU provider for gamers who played games on PCs, which wasn't that popular 5 years ago. It's very popular now. And they found that the chips that process graphics on computers were very efficient at doing the calculations for machine learning algorithms. And so they started to sell their chips into the AI space, into the ML space, and that's provided to be a very big business for them. And it's why the stock has performed the way it has over the last 5 years, going into that new curve. The last kind of curve on the bottom is how we sort of visually think about what we call a double curve. And these curves are very rare. What happens is a company that's building into a curve that's very big at the time, think Apple building into the iPod curve or Netflix building into the DVD by mail curve, they notice some new opportunity, some sort of shift in strategy to update the strategy for the future, and they abandon a curve that's working for an even bigger opportunity. So Netflix is the one we always think about here DVD by mail, if you look back when they started their streaming business, it was still growing over 50% a year. It was a great growth business. It was profitable. And Netflix made the correct decision in hindsight to abandon DVD by mail and go all full steam towards streaming. The stock went down 80% peak to trough as they made that transition from DVDs to streaming. And obviously it's been, I think, one of the best performing, if not the best performing stock in the broader NASDAQ QQQ over the last 10 years. So that's kind of how we think about curves. That's our mental model framework. And then if we flip forward, Mike, I can talk a little bit about.
I'd like to add one other piece on the curves too, is that when each of those curves ultimately ends in a very large addressable market. And that is one thing that anchors our long-term confidence, is knowing that these big addressable markets are on the horizon. I think transportation piece, we talked a little bit about it, but that's an example. Just to put that into perspective, is the smartphone market globally, new smartphones is about $500 billion per year. But if you look at the transportation market, passenger cars, small trucks, and Ubers, Lyfts, taxis, public transportation, that's close to $7 trillion. And so those are the types of kind of these curves, all of them play into that big piece. I wanted to add one of my favorites on the new curve side that LOUP is, the ETF is an investor in, is Ford. A good example of a company that is having a lot of difficulties with its core business, but they have the Mach-E coming out. It's really an impressive car. And I think it's one of Tesla's biggest true competitors. And then next year, mark your calendars, there's going to be a showdown, a good old-fashioned pickup truck showdown here between the Cybertruck from Tesla, which will become available, very futuristic looking, and the classic Ford F-150 is making the jump to electrification. But that's something that it's the most popular car in the US, the Ford F-150, but that's an example of an existing company starting to step into a new curve.
A great example, and it's I think we have some slides on this later in the presentation, but just to pull it forward, at the beginning of the year, Gene and I felt that Ford would outperform Tesla for this year. We're not making a long-term call. We still think Tesla is an incredible company to own long-term, but we just felt that given where Tesla was at the start of the year, given what Gene just mentioned about Ford with the launch of the Mach-E, with the addition of the electric F-150, we thought the stock was underpriced and it wasn't being appreciated as a technology company and for its EV prowess. And so that trade has played out quite well so far this year. I think last time I looked, Ford stock was up over 40% year to date. I think Tesla was flat-ish to maybe down a little bit. We'll see how it ends the year, but it's one that we feel good about kind of throughout the rest of the year. Ford is still in our index today. So let me.
So a little bit about.
Oh yeah, sorry, Gene, go ahead.
Frontier tech, really defining frontier tech. What does that mean ultimately? And we've talked a little bit about it, but I just want to make it most clear is that as we think about frontier tech, by definition, it is always changing. There's a dynamic piece to it. You know, if we think about those 5 segments that we talked about before, the one that when we were ended and talked about the neurotech piece, there's another segment on top of that we're doing a lot of work on, which is space. And the beauty of what we've created here is you don't have to worry about making a selection about what is kind of the next big market, disruptive market, what is the next cutting edge of the frontier. That's part of what we're doing. We take on that. And so there is an element of, because of that, there is an element of adding different themes and potentially even subtracting different themes. But we are closely following that frontier edge. And today we kind of look at, kind of bring it down into 5 different themes that are listed here: virtual reality, AI, self-driving, fintech, fintech and robotics are kind of some of the core areas of investment. But what we really wanted to anchor with this slide is just this idea is that you get optionality into the next big curve.
That's right. And if we flip to the next slide, Mike, I can introduce you to the ETF that we operate in partnership with Innovator. The The points I'd like to make on the ETF are three. One is, as we think about the construction of the ETF, we've made some very specific choices about the kinds of companies we want to put in there. As Bruce talked about at the open, what we're really trying to do is find a collection of companies that could be the next Fang and ultimately outperform the Fangs moving forward. And so as part of that, one of the features of the fund is that we have an upper limit to market cap of $500 billion. So we won't have any mega cap exposure to the Fangs in this ETF. That's something that's a strategic decision for us to make sure we do focus on those emerging companies rather than give you more exposure to things that I'm sure everybody on the call here owns a lot of. The second is just this idea that Gene always talks a lot about, and I think he's right, it's a great catchphrase, which is what's worked in the past won't work in the future. And we say that a lot when people ask us about Fang. I mean, Fang's performance has been incredible over the past 5 years, but what they've sort of done, what's been priced in and what they've built as companies may not necessarily work over the next 5 to 10 years. New markets will emerge, new competitors will come from private markets where we invest today as well into the public markets. And those will create new investment opportunities that we think there will be a handful of that outperform those legacy players, even though they're all great companies, great businesses, and I think will continue to generate decent returns for investors. We think the next wave will generate even better returns. And then the third piece is also tied to that. We're trying to find companies that either you've never heard of before. So it could be a company like an Axon, which you may be familiar with as the Taser company, but they're actually a software company today. Or a company like Blue Prism, which is a London-based AI company that serves enterprises. Or we're also trying to find companies that you may have heard of but not thought of as technology companies. Ford is the example we like to give in that case.
I want to give a couple other kind of highlight some of those examples, Doug. And Axiom, it's tasers, a lot of people know them for that. They also have cameras that are worn by law enforcement. But this is a much bigger than a hardware business. It is ultimately in digital evidence gathering. That is just an important, undeniable theme right now. And separately is really protecting both citizens and law enforcement. And specifically is that some of the gatherings and learnings from this can help with training and even recommendations on the fly. And so there is, I think that's a powerful example of a tailwind around a theme, a topic, and a company that is still largely misunderstood as a camera and taser company. Another one, I don't think you mentioned it, Doug, Baidu. This is a company that has been, it's essentially the Google of China. We know Baidu well. We were there shortly after their IPO, just after 2000. And we, as a sell-side analyst, we covered it for 7 years. So spent time in China, got to know the mechanics of how they have a very protected moat around their search business that is essentially protected by the government. Google won't have an influence in their search business. They'll never be relevant in search in China. But the exciting part for us is investing in a company like Baidu is what they're doing around autonomy. They have an initiative called Apollo, which is their self-driving car initiative. China is the most forward-thinking country, or has the highest priority for electrification and autonomy. And of course, with Baidu and kind of that wall that the government builds around them, it just creates a wonderful opportunity. And if you look at Baidu shares over the last couple of years, they actually have not done that well. They've done, and that really is the opportunity. What it tells us is that most investors think about Baidu as a search company, but we really think that at the very core, autonomy is search, and it's searching the real world around us, and Baidu has an opportunity to capitalize on that.
Yeah, Baidu is currently the biggest holding in the ETF, and just add one more thing to what Gene said about Baidu. They've been very aggressive trying to create pilots to prove their AI technology with Apollo. They just signed, I think this was earlier this week, essentially a contract with a smaller China, a city in Western China, where they will sort of automate some of the street mechanisms and some of the public transportation with Apollo. So it's kind of like this test ground to make sure that Apollo is ready for prime time. And I think it's actually a really powerful sign for them moving forward. There's not progress like that we've seen in the US yet for that aggressive of sort of an AI rollout in a US city. So that's one we continue to like in the ETF. Mike, if we flip to that next one, I can tell you just quickly a little bit about our investment process and the selection process going into the index. And then Gene and I, number one, we always love questions. If anybody has questions, you can submit them to Mike and we'll get them up here on the screen. We're happy to answer them. And then Gene and I are also just going to talk about some of the things we're thinking about in technology too, so you understand just how we think as investors beyond the mechanics of the index and kind of what we're investing in. So in terms of the process quickly for selection of the ETF, we recently just simplified this process a little bit if you've been following us. What we do is we have a global list of companies that we view as frontier tech innovators. And the list is about 250. We're always constantly managing that list. A lot of new names get added, some names get taken out. And what we do every time we rebalance, which we've moved recently to a monthly rebalance, is we identify through our proprietary research and some criteria around the company's level of investment and revenue from these frontier categories, the 30 best names that we think represent good frontier technology investments. Those are the names that make up the index. And then Mike, if you flip to the next slide, all of them, as we said before and as Gene went through, they touch on these frontier categories that we've identified: AI, autonomy, VR, AR, robotics, and fintech. And then on the next slide, I'll tell you that the way the mechanism works after we select those 30 companies is they're then weighted by revenue growth and then the acceleration of revenue growth from the prior quarter. And as we talked about before, we think that growth is a very important component of identifying technology companies. And so we make sure that we do have a growth bias through this ranking mechanism that ultimately selects the top 5 names that are overweighted. They have a 5% weight on a rebalance in the portfolio, and the other 25 names are 3% weighted in the portfolio on the rebalance. Next slide, Mike. Just a few reasons, just to kind of reiterate what we talked about earlier about LOUP, the index, why you should pay attention to our fund here. We're trying to get you access to companies that you may not be aware of, companies you may not think of as technology companies right now, but we think are technology companies. We're trying to leverage our experience as both private market investors and public investors to identify the best companies and themes to fit that sort of portfolio criteria. The team Gene mentioned, we've worked together for a decade. The rest of the team that we work with, it's a team of 8. Most of the people on our team have worked with us for 3 to 4 years, so we're very experienced. We've had a lot of time together. We all kind of share, I think, good views that we debate heavily in terms of finding good investments. So you will definitely find some contrarian ideas about things that we all disagree with one another that eventually get into the portfolio. Those are often the best ideas. And then the final reason is, if you have been following the Fang names and you want to get exposure to what we think are the next Fangs, this is our ultimate objective. If you flip to the next slide, Mike. Just a couple more quick thoughts. I mean, this is one way that we kind of compare ourselves to ARK and the Qs. Those are the 2 funds that we think of as sort of our peers. Obviously, we have a little bit more of a discipline around valuation. As you can see from the metrics here, particularly against ARK, we do think valuation is important. I would tell you our philosophy is we want to be invested in growth just like ARK, but no company is a good investment at any price. Price does matter ultimately. And so we do try to apply that discipline as we identify the right companies to go into the index. I think that's something that does set us apart a little bit from ARK, is that we are both theme and valuation aware investors, even though we still focus on growth. On the next slide, Mike, again, the exposure map, we have fairly limited overlap to both the Qs and to ARK. Part of that is, I think, the companies that we're trying to identify, we do have more international exposure compared to ARK and the Qs. Right now, it's about 45% of the fund is overseas companies. I would say typically, we're probably going to be more 65 to 70% international. The reason that we're overweighted there right now actually ties back to valuation, like we talked about before. At the end of last year, we really started thinking very heavily about whether we were in a bubble or not. We felt that there were more opportunities internationally at more reasonable valuations for companies that were still creating these innovative technologies. And so we tried to overweight the portfolio a little bit to hedge us from what we thought were sort of bubble-like valuations that we're seeing in some of the US sectors. And I think that's been playing out a little bit over the last 2 weeks. Then Mike, one more, I think this is our last one maybe. Ford, we kind of talked about this one already. This is just an example of how we think about ideas as contrarians. I don't think most people think of Ford as a frontier technology company, but we think they're wrong to exclude Ford from that conversation for the reasons we talked about before. And then one more now, I think, Mike, sorry.
I think I take this one, I think, Doug.
Oh, you, Bruce, yeah.
All right, thank you. It's awesome, guys. I think everybody on the line, and I'm sure you guys agree with this, but when I look out over the next 10 to 15 years, I think that technology is going to completely change our lives to a large extent of what we do, how we do, and more how we do what we currently do, and being positioned properly in light of that. I've been a tech investor for quite a while, just believing that technology is going to continue to be pervasive and create these huge innovations within our world. And I think that's just picking up speed, frankly. And over the next 10 to 15 years, we're going to see a bulk of that really start to roll out. And it'll probably keep going after 15 years, but I think we're really going to see a ramp up here. And that's why I'm an investor, in the frontier of tech, because I think the changes are going to be amazing. I just want to review with everyone quickly here, the performance of the funds or of the ETF, so you can kind of get a sense of how it's done. And I mean, it's really pretty amazing. It doesn't matter if it's over, the common period they have on here is really just since inception. I don't know if there's a new way of saying it or whatever, but you can see it's 32.56, and you can see it's outperformed the NASDAQ 100, which is really our benchmark. It's really outperformed everyone within the group. And you can see, over 1 year, it's had great, so over longer periods and over shorter periods, it's had, significant performance. And Doug was mentioning, some of these overvalued names, and many of I had a question the other day. I was doing a podcast, and they said, what do you think of all this money ARK was able to raise in this period? And I frankly said, well, I'm not that surprised. It's when you bring a product out, sometimes it's difficult to get people to invest in a product at the right time. And I think we saw a bulk of the money go into that product right at, pretty close to the peak here. And, it's down 20+%. And I think ARK is a great alternative to that. It's only down maybe, since the peak there, 9% in comparison. And, over the quarter, LOUP ETF is up about 15%, where ARK is up about 2%. So it's, I think, a pretty important metric to look at. And I think speaks to the approach that these guys take, and the fact that you're not just buying the biggest, hottest names in the market, but you're buying names that have a reasonable valuation, have very little overlap with the Qs and with ARK, and at the same time are producing tremendous returns without the volatility that we're seeing in the others. And the chart down on the bottom really just shows where we lay out, within Morningstar compared to our peers. And here's another one, just to give you a sense from a volatility standpoint, where we're at. And with the return, you can see the 32%. This is since inception, and kind of how things look. But I think that when you look at the graph down below, you can see it best. So the performance has really been terrific. And I think as far as, the overlap is so low compared to the other products, I really think that a great application for everyone on the line here is to maybe pare back some of those mega cap exposures, whether they be to the Qs or to ARK or wherever, and to allocate part of that to LOUP. And you're going to get the exposure to, more the frontier edge of it, but not of technology. And you're going to get the performance that you want there, but at the same time, you're not just buying, the highest flyers in the marketplace. I think is a great way to diversify your exposure in technology. Maybe just go into the next slide here quickly, Mike, to help wrap this up so that we can get to some of the questions we've got. So just to kind of review everything with everyone, broad exposure to disruptive, cutting edge technology companies, with what I consider to be some of the top research available to you, identifying the themes and the companies. Only 30 names, as been mentioned before. So, you have a focus group that you are buying, not just some big group. Very low overlap with some of the biggest names out there. So I think that the other thing that a lot of times gets lost here is that these are international as well as domestic companies. So you're not just, getting exposure to U.S. companies here. You're getting exposure to the globe and some of the best ideas across the globe. And I think we all know that good ideas come out of the U.S., but really from, technology perspective, some of the best names are in other places in the world. And we want to make sure you get exposure to those as well. So with that, I think we're pretty much ready to wrap things up. Gene and Doug, I didn't know if you had anything right at the end here that you wanted to kind of wrap up with. But
I think, Bruce, how much time do we have? 1 minute?
Yeah, no, we got a little time. Go ahead.
Okay. The other.
Just so you know, we got a couple questions that came in.
Okay, let's do questions and then.
Okay.
Yeah, let me ask you this question, Gene. I didn't do a good job probably explaining it fully before, but one question was, what is the metaverse? Can you describe the metaverse?
So think of the starting point of the metaverse is like a game, Call of Duty, Grand Theft Auto that's a 2D version of a metaverse. So it essentially is you living out kind of in a different, in that case, kind of a different experience. But you can also have a metaverse that is kind of built in a more real experience. So it could be between you and someone, a friend, for example, just going on a walk, and that you're surrounded by this digital world, essentially. And so think of it as a immersive digital world. If you're familiar with Ready Player One, that would be an example of a metaverse, that film, kind of the virtual reality metaverse. And for those of you who are old enough to remember Second Life, which was kind of this world that people could experience, that was on your computer and hosting, you can have different, take on kind of different personalities within it. That is, I think, kind of the earliest pieces of what the metaverse is. What it needs to happen to come to fruition is we need to go from 2D today, it's a huge opportunity with Roblox and some of the game publishers, to a more immersive VR and augmented reality experience. One last thought on the metaverse. You either need to, as far as is the world a better place because of the metaverse? I'm old, I'm 50. I don't think the world is a better place with the metaverse, but I am old, I am not the future. And if you talk to people who are under 20 years old, this is exactly what they want. That's why Roblox has had the IPO that it has. Half of their customers are below the age of 13 and they can't get enough of it. And so that's the metaverse.
The next question we had was when the technology that we mentioned, the neurotechnology to cure diseases, will be available, and then kind of the impact on Social Security pensions, because people would be living obviously for longer and would only be affordable to the wealthy. So I can take that one. In terms of when that technology will be available, an early version of that technology is just starting to work through the FDA approval process right now. For this type of technology, usually that's a 7 to 8 year process. And so we have a pretty long window to think about just testing and getting early people in test cases to sort of see if the technology really works. And so to put a timeline on it, I think in a decade, we will start to see some of this technology emerge, and for very serious case patients, maybe start even to be used in clinical settings in a widespread way. To think about it being a common thing that happens, I think we're still a couple decades away. So this is a very long-term theme. But I'd say, you know, within 5 years, we're going to know a lot more. Within 10 years, I think we're going to start to see it in the wild much more frequently. In terms of how it impacts kind of Social Security and government, you know, some people would probably argue that that's why you should invest in crypto and diversify yourself away from inflationary policies that are going on right now, because there may need to be more of that if people are living to 120 instead of 80. I don't know what the end effect is there yet. It's something that we've been thinking a lot about, and I don't think we have a good answer to what does it mean if longevity, this sort of technology around longevity in general, is effective. And we'll have more thoughts there. We're happy to share them with you. We publish all our research on our website. You can find it there. We should have more there soon. And then the last question around, will it only be affordable by the wealthy? Early on, almost every new technology is at a very high price point. And so for this particular technology, since it is a medical device, I think it's something that will flow through the insurance paradigm. I think that it will be available to people who really need it very severely initially. I do think there will probably be some use cases for maybe augmentative purposes or other experimental purposes that wealthy people do engage with. So that will be part of the rollout of this technology, just as it is for kind of every new technology. The next question was, what is the turnover ratio? The way we think about this is on a quarterly basis, usually about 20 to 25% of the portfolio turns over. So 30 names, usually every quarter we're changing out around 6 names is how we generally think about it. Let's see. Sorry, the screen is small. Let me just read this one quick.
Yeah, oh, go ahead, Doug.
I was just going to say that one other question we had here, what effect does LOUP believe cryptocurrencies will have on the metaverse and other emerging technologies? What does current and future exposure to crypto look like? I can hit that one and Gene chime in. The crypto effect on the metaverse, I think, is a very important tie-in. One of the key parts of a metaverse is that there's a real economy tied to it. The point of a metaverse is to create an alternate world. And I think in our view, you can't have a true alternate world without a vibrant economy as part of that creation. I think Roblox is maybe one of the only examples, if you're looking for one today, where developers actually make money in the virtual world. Last year, Roblox sold about $1.8 billion worth of virtual currency, mostly to kids. 300 million of that went to developers. So it's a real economy. I think that crypto plays into that because it's transferable across worlds, and that's very important. You can use crypto to some degree in the real world, and with Roblox, your currency, it's harder to kind of pull out of Roblox. You have to exchange it for dollars, and then you can use it in the real world. Crypto, in theory, I think, makes some of that friction a little bit less onerous. So we do think crypto is a part of the metaverse. In terms of exposure to crypto for us, it's a space we spend a lot of time thinking about. We got very bullish on crypto toward the end of last year. And our very quick view, without getting into the technology, is that crypto, and particularly Bitcoin right now, is consensus. And that might sound like a bad thing. We actually think it's a good thing. I think Bitcoin's future price really relies on it being consensus, because the more people you have believe, the more people that are putting money in, the more likely it does become ultimately the sort of stable store of value that everybody talks about crypto being. And so we think crypto is a good thing to be long in. I don't think that the sort of 200% annualized returns of the last decade that you've seen, and some people talk about, are likely to think about in the future. But we do think it's an asset that is a good place to be exposed when it comes to frontier technology.
Bruce, do we have one more minute?
Yeah, go ahead.
I think it'd be appropriate to end just about, beyond the themes and beyond the trends, the companies, just who we are as an organization. And one thing that you've heard the word contrarian used, and that is an important part. We are hungry for learning, and we're contrarians. And I think that that is what the Loop Frontier Index captures, is this forward thinking with a contrarian view. Consensus, by definition, you cannot outperform with consensus. So I wanted just that important, very just part of who Loop's DNA is to be a contrarian.
Yeah, well said. And I think with that, we don't have any additional questions. There are a couple of questions here that we will get back to you on. We appreciate this opportunity to spend some time with you. If you have any additional questions on the ETF itself, please visit us at innovatoretfs.com, and we'd be happy to work with you to answer those questions. Gene and Doug, thank you so much for your time. We really appreciate it today.
Thank you.
Thank you. Bye-bye, everyone. Thanks for joining us.